Good morning. My name is Frank Grinnell. I've been advising professional money managers and investing in the stock market for over 20 years. It serves as my day job, but most importantly, it is my absolute passion. On Street Views, I offer my daily viewpoint on the stock market in under 7 minutes. I will cover things like the global macroeconomic picture, the mood of the market, company-specific news, secular trends with some actionable sector and stock calls. I hope my insights are useful to you, whether you are a professional money manager or a passionate investor. At Grinnell Capital, we actively manage dynamic stock and ETF models for financial professionals and their clients, as well as individual investors. If you want to learn more about what we do, send me a note, frank@grinnellcapital.com. You can also find more of my insights on Twitter @GrinnellFrank. And now, today's Street Views. Hey, good morning. September 29th, Thursday, 2022. Silicon Slopes happening in Salt Lake City. Maybe I'll see some of you there. Okay, so market-wise, core PCE coming in at 5.6% versus 4.4 expected. That's a Q2 data. That's a little dated, but still hot, which not unexpected, I don't think. Jobless claims 193,000 versus 215 expected. That 193 is pretty light, and it's been a trend of lighter and lighter jobless claims. So the labor market's still really tight, and that's not what the Fed wants to see. I think that's probably really more what has the futures on their backside this morning. They want less consumption. You don't get that by having a tight labor market. And then my question to you is, did you buy some vol yesterday? Yesterday was a great day to buy some vol. Anyway, so that'll come in handy today. Had you done so. We're getting a bit more constructive on oil. Just taking a look at just simple inventories of liquids are at lows not seen in several years. SPR, as we know, being drained for political reasons. It's very possible you're going to see some burning of oil as energy over in Europe this winter. Heating oil, fuel oil, gas, diesel, what have you. It's happened. There's precedent for it. It's much cheaper than coal on an energy production basis. We bought some ExxonMobil yesterday on the thought they'd benefit from exports to Europe. One of the few charts out there that still looks constructive. The stock's above the 200-day moving average. So we bought some ExxonMobil in our stock model, and we bought some XLE in our ETF model. And just speaking of constructive looking charts, just still more commodity land type stuff. CF, the fertilizer company, that's still above its 200-day. We don't own it, but wanted to point that out. That's still a space we like, the agriculture space. It's really only four fertilizer type names: CF, Mosaic, Nutrient, NTR, and then Corteva, I believe is the other one. One other name I wanted to mention that's unfortunately going to benefit from the Ian destruction that's happened. Quanta Services, PWR. It's one of our favorite names. Period. Power transmission distribution. They're going to have plenty of incremental work when it comes to restoring power lines and what have you. Thanks to Hurricane Ian, and still above its 200-day moving average. We bought a little more yesterday in the morning when it wasn't quite up a ton, but on a pullback we'll buy more. I think that's just kind of one of those names that just fits right in a secular growth story right now for this country and what we need in terms of power transmission, distribution, the grid. And obviously with Ian happening, that's going to be incremental work and contracts for these guys over the near term. And that's it. Other than that, just be careful out there. Looks like the market wants to give it back today. We'll see how it trades. Yesterday was a constructive day given the news that the UK pension system almost collapsed. But we'll see what happens. Have an awesome Thursday. We'll talk to you tomorrow.
And now for some important disclosures. Grinnell Capital is a state-registered investment advisor. Services offered by Grinnell Capital can only be offered in certain states where Grinnell Capital is registered or meets required exemptions. Registration does not imply a certain level of skill or training. For additional information about Grinnell Capital, including its services and fees, please review the firm's disclosure statement as set forth on Form ADV and available at no charge at advisorinfo.sec.gov. This podcast is provided for informational purposes only. The information contained herein should not be construed at the provision of personalized advice and is subject to change without notice. This material should not be considered as a solicitation to buy or sell any asset or engage in a particular investment strategy. Investing in securities involves the risk of loss, including loss of principal invested, and may not be suitable for all investors. Past performance is no guarantee of future results. This podcast contains certain forward-looking statements which indicate future possibilities. Actual results may differ materially from the expectations portrayed in such forward-looking statements. As such, there is no guarantee that any views and opinions expressed will come to pass. All expressions of opinion reflect the judgment of Grinnell Capital as of the date of publication and are subject to change without prior notice. This podcast contains information derived from third-party sources. Although we believe these sources to be reliable, we make no representations as to the accuracy of any information prepared by any unaffiliated third party incorporated herein and take no responsibility therefore. This podcast is provided with the understanding that Grinnell Capital is not engaging in rendering legal, accounting, or tax services, and we recommend that you seek out the services of professionals in these aforementioned areas. The principal investment focus of the accelerator model, the strategy, is to achieve strong relative and risk-adjusted returns, primarily by investing and trading in securities issued by companies that focus on the global information, technology, consumer, healthcare, industrial, and infrastructure sectors. These sectors are characterized by robust secular growth, an abundance of both new and maturing product cycles, a high degree of competition that creates the potential for relative winners and losers within a subsector or theme, a high degree of revenues and earnings volatility, rapidly changing sentiment and public perception, significant yet unrealized potential for globalization, and superior relative liquidity. Investment in the strategy is speculative and involves a high degree of risk. The second investment model is called the ignition model. The ignition model is an all-exchange-traded fund, ETF, strategy with investment objectives similar to the accelerator model. This model seeks to capitalize on long-term growth trends experienced by the market leaders in various areas and sectors. The ignition model will also seek ETF investments based on cyclical forces experienced in the U.S. and the global economy. This model is also designed to have the ability to offer some downside protection in the event of significant market stress through investments in ETFs designed to take advantage of market volatility. The strategy's performance can be volatile. Grinnell Capital has total trading authority over the strategy. The use of a single manager applying similar trading programs can mean a lack of diversification and consequently higher risk. For more important disclaimers, please visit our website, grinnellcapital.com.